Excellent. And so, as I mentioned, if you have any questions for Richard, just type it in the chat and we'll cover in the Q&A at the end of the session. So I'm going to stop talking now because you've not tuned in to listen to me. I'm going to pass over to Richard, and Richard, I'll allow you to introduce yourself.
Well, good evening, everybody. I mean, it's fabulous to see such a large turnout for such what is potentially a boring subject. This slide is to remind me who I am, because I've just reached the age of 75 and I'm getting a bit forgetful. But I thought it would be useful. I think I know one of your midst, and obviously I know Martin and Michael, but I thought I'd just say a few words about myself. 50 years in tax, that's in the 70s for those that you can't add up. Huge time. I was a Deloitte tax partner until 2005, a very enjoyable career there. I specialized in tax and sport when I was at Deloitte, and more latterly have done a lot of community sport for major governing bodies of sport. But my best client by a country mile is the RFU. The people are very good to deal with, and the community activities that they get into, the clubs, and now referee societies are really good to deal with. Before I just go on, ask Martin to go on to the next slide, could I just put in an apology here? Because if there is anyone that's ever worked for HMRC or is on their staff at the moment, I apologize if I insult you, but I will probably say a few harsh words about HMRC and its current performance. But having said that, forgive me if I do and it offends you. So can we move on to the next slide, please? Yeah, as Martin said and demonstrated in the outline, I was going to start off with legal structures. You might say, well, what's this got to do with the price of bread? Well, it provides, I'm sure you're aware, your legal structure provides the governance of your organization and is very important. It's often ignored by people running sports clubs. I can tell you, hopefully your societies will take recognition of what your constitution says if you're unincorporated. That is, you just got referees or members of your society, and it's a simple constitution. That is one legal structure that we find increasingly frequently in sport, in rugby. And the other side of that particular coin, lots of societies, lots of clubs choose to use a company, which has benefits, which I'll go on to in a moment. And a company limited by guarantee, been around for a long time and tends to be the favored type of company which is used by not-for-profit sports organizations. So I would say you will answer that question for yourselves. I know that amongst your midst there are some societies that are incorporated, but it is important to establish where you are. And I'm just going to go on to say a few words about the company limited by guarantee structure, because I think it is worth emphasizing how positive and how important this can be for running a sports organization, running a society. In the current world where finances are tight, prices are going up, people can't afford many things, there's a risk of financial difficulties at any sports organizations, and using a CLG provides limited liability protection. It means the committee can't be sued personally if debts continue to rise, or maybe not continue to rise, start to rise. And it has a lot of practical benefits, such as the company can be on the register for owning property, on the bank account. It can hire people in its own name, and generally it makes administration much simpler. I would go on to just to say a few words about that last line on there, because I'm sure nearly all of you will say, what the hell is TRS? Well, TRS is the Trust Registration Service, and unfortunately, if you're an unincorporated sports organization, a society, a club, then this is an anti-money laundering requirement. The government, in their wisdom, have decreed that because you've got a trust arrangement for holding your assets, you have to register with TRS. Now, don't panic, don't run away, don't lose sleep at night about this. We're about to produce a national guidance note on what TRS means for those unincorporated clubs. If you're a company, forget what I've just said. But if you're not, watch this space, because you will get some guidance coming out within the next few weeks. It's been nearly 2 years in its gestation period, so it better come out within the next few weeks, or else I shall have something to say. So that was a little bit about background. What is your structure? But moving on to the next slide, actually, it's pretty irrelevant to your tax status. And tax status is very different to your legal structure, because each referee society is potentially liable, exposed to corporation tax. And that is because for corporation tax purposes, it is levied on companies and associations and bodies with simple constitutions that are not incorporated. And that's not well known, I'm afraid. There is an exemption, a single exemption, which could potentially apply to referee society. And I'm sure you're aware of charity status. But just moving on to that next slide, it is possible, if you're a charity, to avoid all these issues about corporation tax. And fortunately, at the turn of the century, sounds like a long time ago, it's over 20 years, the Charity Commission decided that advancing amateur sport was a charitable activity. And so therefore, sports organizations could constitute themselves as a charity if they satisfied the Charity Commission and registered with them. I don't know whether anybody has ever considered that, and maybe we just forget about that slide, because if we get to the end and we've got no corporation tax liability, we might not want to look at it, because although it's a brilliant brand, it does carry with it a huge amount of administration. So I will just leave that there as a thought. So we'll move on to the next slide, which is all about corporation tax on societies. And corporation tax for not-for-profits I've been involved with for a long time, and I'm bound to say that it's not a simple and easy to follow subject. And tax is not generally, but that first point is well made, that it, as I said before, whether you're a company or an unincorporated society with that simple constitution, you are potentially liable to corporation tax. You may not have come within the eyes of the revenue, but sometimes if you incorporate, this may trigger HMRC's interest. So you may not stay under the radar forever. And even if you stay and you don't use a company to carry on your activities. So what is your responsibility vis-a-vis HMRC and corporation tax? Well, if HMRC issues you with a CT return, you have to complete it unless you can get them to agree not to ask you to, and that can happen. And the case I dealt with, it did happen, fortunately. Or alternatively, even if the revenue don't ask you, you have to assess your corporation tax liability if you've got one. Now, years ago, when I started, everything was on the revenue's onus to tell you and instruct you to do things. And correspondence went on for years and years and years. And very often tax was deferred with very little interest or penalty being due. It's not the case now. You'll all know from your personal affairs, it's self-assessment for income tax. So the revenue have suffered significant reduction in numbers over recent years. And one way of getting back and achieving that reduction is to get you all to do most of the work yourself. So that's the scenario. And unfortunately, if you're within either of those two and you can't convince the revenue not to ask you for that tax return, I'm sure some of you will be aware, you have to file. But the problem is it's all online. So people like me who are a bit IT literate would struggle. My generation generally are not particularly IT savvy. And the consequence of having to go online to file tax returns are hassle, costs, because you may employ an accountant to do it for you, and certainly it eats up volunteer time. So what we should try and do, if at all possible, we should try and avoid those wretched CT returns. And I know one or two of you have had that argument and still fighting that battle with the with the revenue. So let's go on and say, well, I've gone on about corporation tax, and you have to file if you've got a liability. Well, do you have taxable profits? I mean, that's the question you ask. Unfortunately, you just can't look at the accounts and say, well, we've got a surplus, so we've got a tax liability, or we've got a deficit, so we haven't, because you have to deal with the tax rules, which are not logical, never have been, never will be, and are complicated. It's, in essence, you have to look at your accounts in detail, and this is what I did with the Referee Society that I helped, and we had a real good scrutiny of what was in those accounts. So when you look at those accounts, what element of them, what element of the income might be taxable? Well, in general terms, you might have some trading income, you might have some property income. I suspect this doesn't apply to many of the societies here. That will only apply if you've got land, or freehold land or leasehold land, and you rent it out. Many of you will have interest income, bank interest income. Might not be much these days, but going forward, it might be more if you've accumulated reserves. And the fourth category is capital gains, which I suspect you won't have capital gains, but nevertheless, 3, 4 different sources of taxable profits. So what you have to do is then, when you've identified those sources, you have to do the calculations, because obviously the gross income that you receive is not taxable. You're allowed to offset your expenses. So you can deduct the costs of earning the income generally. I think one question that was asked in advance was, well, if we invest in equipment in order to carry on our trade and generate that income, can we deduct the cost of that? Answer is yes. You don't deduct depreciation of the equipment, but you get special allowances known as capital allowances, which generally, if your investments are small, 100% write-off in the year you acquire the equipment. The government are forever changing the rules just to try and get business to invest, but the rules that apply for Marks and Spencer equally apply to not-for-profits such as societies if they're in tax-paying situation. The whole tax scene is very similar to that for clubs, which I've dealt with the revenue 15 years on that, so I know what their thoughts are. And if you were really having a sleepless night or couldn't get to sleep at night, I would suggest that you might like to look at the manuals that the revenue have produced for their inspectors. Lots of information. The only problem is you will go from pillar to post. You'll go around in a circle very probably. So you need an interpreter. I could be that interpreter, and I was in the case that we were looking at. So interest income, let's just say interest income. Remember that when we come to the end. If you've got interest income, you probably need to do something about it in terms of corporation tax. But let's have a look at trading income, because as I've said, well, if I haven't said it, I will say it now. This can arise even if you're a not-for-profit referee society. Whether you can distribute your profit or when winding up the assets go to the members or not, doesn't matter. It's whether in your activities you carry on a taxable activity, i.e. a trade. And generally, if you look at all the revenue guidance, they will be very happy that the income from your members do not constitute trading income. I won't go any further than that, but put that on one side. So don't worry about that element of your income that comes from the membership fees or subscriptions. If you hold an event and it's attended by members, that's not going to make a surplus. That's not likely to be taxable, but it can include non-member income. And here, certainly in the case I looked at, and I'm sure in most of your cases, you raise charges and fees to clubs for the referees you provide. And that is where, in the case we dealt with, and in other cases, you will find the revenue, if they get hold of your accounts, will start asking questions. And they might just automatically say, well, you've got a surplus, some of it's from clubs, so it's taxable. And I think probably almost for the first time, this is it trading question is one that I had to really look at quite carefully in relation to the facts of this particular case. I put mutual trading on that right at the end, because it always comes up when I'm talking about not-for-profits, clubs, societies, whether they should be paying tax. That exempts the profits from members from tax. It does not exempt the profits from third parties, from clubs, from fees, etc., etc. So forget about mutual trading. It's not going to get you out of jail if you're in jail. So what is trading? Well, yeah, I'm grateful for Martin sort of varying the slides. It's quite helpful just to have quite a different presentation. Although we've had the concept of trade for years and years, there's no statutory definition of it. You've got to look at what the courts have said about what is a trade and what the revenue guidance say. I mean, generally, if you follow the revenue guidance, you won't be in trouble. Essentially, it distills down to the question of is your club and the arrangements it make, are they commercial? I always like to think of the corner shop, the company running the corner shop, with the director running it, the chap running it, you know, sells his goods and goods to all the members of the public, tries to make as much money for himself as he can, and generally budgets and makes surpluses, makes profits, and distributes them either by way of dividend or by way of earnings. Yeah, if you think of that, are you doing that? I don't think you are, but nevertheless, if you're making surpluses, it may be argued that these shouldn't be tax-free, or an element of those surpluses. So the name of the game is to convince HMRC that these activities, the supply of the referees to clubs, are not commercial in nature. They're not commercial fees. And to do that, you need to look at the accounts. But as we did with the society I acted for, we looked at the operations in detail. And at the end of the day, just looking at it again today, we wrote a 6-page letter to the revenue, going through a lot of the background, the rationale for a referee society, the fact that it's needed by the RFU to stand between the RFU and the county and the clubs to make sure their matches are regulated efficiently with officials that are competent, are trained, and do their professional development, etc., etc. And that for me in this case was the real nub of the thing. And I thought it would be useful just to extract a few little tips from the material that we put into that. I don't say this is not all inclusive. I think the letter runs 6 pages. My summary at the end, there were about 8 or 9 bullets. You need to ignore a sort of thing, and these are the reasons. But these were the reasons that we came up with in our case, and that was the referees only get expenses. They're not rewarded. If they were rewarded, we'd be insolvent, or we'd have to pass on those costs to the clubs. They're voluntary. The society board, the committee, they're volunteers. In this case, there's no premises. Everyone worked from home. At the beginning of the year, or when the fees were reviewed, and this was very occasionally, I think it was only once every 4 or 5 years were they reviewed, they were covered. They were intended to cover the expenses only, and were not a commercial rate. The budgets, if you looked at the budgets, they were drawn up to cover the cost and minimize the fees to clubs. And finally, possibly this should be the most important, it should have got on the top. This activity was totally driven by rugby's requirements. It was absolutely nothing to do with making profit from providing competent referees to the clubs in the county. So that was where we got to. So I think probably the next question we need to ask is, because you'll be many and varied situations, what contact has there been with HMRC, and what contact should there be with HMRC? I'm not suggesting you all run away and contact HMRC, but I think you should at least find out where you are for your own peace of mind. So ask the question, look at the files. And the one thing I notice about voluntary sport is there's no corporate memory. Someone will do a job of treasurer, I'm thinking particularly of clubs. In one case, he fell out. In one case, a chairman fell out of the club. They handled the tax. Nobody else knew what was going on. So try and find out what you've done, what's happened in the past. Have you filed CT returns? Are they accurate? Have they been requested? Should you be filing them? And if you filed, what the revenue's approach been to surpluses from the club fees that have been charged? If there have been changes in the society's operations, this may colour the picture. It may be different today. And finally, I would say, if I were the treasurer, clarify the tax position. And this last point is the sort of the holy grail of all of this procedure and process, is try and get the revenue to agree that you're dormant for tax purposes. And I'll say a few words about that in the next slide. So remember that word dormancy. I know some of you will be familiar with it, but I'll just say a few words about that now. And I start from the position, and it's a theoretical thing. You have to advise what the position is, and then people can either say, well, we'll ignore it because the revenue will never chase us up, or you can actually do something about it. But interest income is prima facie reportable, whatever level it is. So even if it's 100 quid, prima facie, that's subject to corporation tax, because there's very little you can offset against interest income. There may be one or two things you can do, but remember that. However, if you only had interest income as a taxable source, and bearing in mind that earlier analysis of what potentially the taxable sources were, the revenue will treat you as dormant if your annual corporation tax liability is £100 or less and is expected to be so, and you operate for the purposes of the benefit of your members, which you clearly do. Sports clubs do generally as well under the Constitution. And if that is the case, the revenue will write to you and will say, we don't require corporation tax returns. This is going to be the position for the next 5 years, and then we'll review it. And you're on the records, you will have a reference number, but you will have a big tick against your name, dormant, leave these people alone. So we'll perhaps just talk about that a little bit later, but this will remove the risk of past corporation tax liabilities. And the chances are the revenue won't suggest this to you. They'll send you, if they become aware of you, their automatic reaction will be, you need to file. Well, however, don't just accept that. Look at what you would be filing, and if it's a tax liability of £100, then write to them and just not wait for them to give you dormancy. Argue that you should be dormant, and that is precisely what we did for the society that I was involved with. So I think we're on to my last slide. I think I'm keeping to time. Hopefully, leave plenty of time for questions. What should you be doing? Well, as an accountant and as an advisor, I would immediately say, if I was coming in to talk to one of you, I would say, well, what is your current tax position? What's happened in the past? If nothing's happened in the past, have we got a liability? Are we comfortable with where we are? But for goodness sake, don't ignore HMRC. And if they, don't put any letters in the drawer, or don't put them in a pile of post. As volunteers, I'm sure they're horrible letters to get, and there's a great temptation just to ignore them. What can happen is there can be estimated assessments, penalties for late filing, interest, and it just clocks up. And if it's left for a number of years, it can run into 7 figures, over £10,000. And then just have that review. Do we file C2 returns, and are they accurate? If we don't, should we? The most important question for me, bear in mind where we got to on the case that I dealt with, is dormancy available? Is that de minimis corporation tax liability exception available? And I would certainly suggest you read the briefing note again that the RFU put out, which I wrote, perhaps much more succinctly than the 20 minutes I've been speaking. And if you've got other committee members to convince that there's an issue that needs to be looked into, show them that. And do consider approaching HMRC. I mean, despite what I've said, it is in your interest, that is in the revenue's interest, if you haven't got anything to pay, not to be on their records and for them to worry about, should they be asking you questions, should you be filing returns, etc., etc. There's something in it for both parties, and there is a guidance note called trading and non-trading, which we will circulate the link after this, which tells you how to approach Corporation Tax Services Department of HMRC. It gives you an address so you can write to them. If you're unincorporated, you have to do it in writing. If you're incorporated, I think you can do it online. But that can get the ball rolling. But don't do it until you're ready. Because if you have got liabilities, you may or may not have. You want to be ready. And if you do disclose things to the revenue which you haven't done and you should have done, you'll get a lot of brownie points when it comes to any settlement. So, Martin, shall I hand over to you and we go into the Q&A? I know we've got 6 or 7 already, haven't we?
Absolutely. Thanks, Richard. I will just turn my camera on. Oh, you want me to do that? Why? There we go. Lovely. So yes, we do have. Yeah, I am here. We do have a number of questions which were posed beforehand. If you have further questions, and I think there may be one in the chat for me to pick up. I'll just check. Now that's Ian saying hello. But if there are any questions as we go along, then please pop them into the chat. But I'm going to read these questions to Richard as they came through. So you've touched on this one, Richard, but it's worth reiterating the point. So does the purchase of radio comms for teams of 3, etc., necessitate a capital allowance claim?
Well, the answer to that depends upon whether you're carrying on a trade in supplying referees to clubs. If you are, then this is a cost of that provision, because the referees couldn't do their job without this equipment. If it's capital equipment and and that's the way you would treat it in your accounts, I mean, you might decide to write it off, but either way, it is deductible. Yes, the answer to that is yes. If you're carrying on a trade, you can deduct it, and you effectively, under the current environment, even if you capitalize it, you put it as an asset in your accounts, you can get 100% tax relief on that as a piece of plant or equipment.
Wonderful. Next question is, as a not-for-profit mutual society, are we not exempt from corporation tax?
Unfortunately, you're not. The mutual societies do not carry with them. Well, they do. If you are registered under the Cooperative and Community Benefit Societies Act, there are certain tax benefits that you get, but they're all to do with payments out to the members, and you don't pay monies out to members. So the answer is, and it's quite clear. I was looking at the Revenue's business manual on that today, and it's quite clear that in their view, as if it weren't clear, mutual societies are subject to corporation tax if they've got taxable profits. So I'm afraid, unless you're a charity, you are in for a liability if you've got taxable income.
Okay, thank you. Next question is, how is corporation tax calculated?
Well, yes. What you have to do is it's a bit anal, actually. You have to go through your accounts, identify the taxable source of income, and principally it will be interest income, I guess, and trading income. So you identify if the transactions with the clubs were a trade, you would have to identify all the fees and all the income from those clubs, not the members' income. So you're segregating your activities between a non-taxable one, being the members' transactions, and the taxable one, if it is a trade. You may be able to argue it's not. And then you look at the costs of providing that service, and you can deduct those costs in full. You can generally deduct a portion of overheads. You can take your capital allowances, in answer to the previous question. And I believe it will be possible to take some notional costs, i.e. the volunteers that are running this activity, which is the majority of what you do, will put in their own time. They won't charge it. I know they won't charge it, but you can actually put in there a charge at an hourly rate, well, an hourly rate for the hours they spend, and that is deductible. So effectively, you're getting relief for notional costs, and that's something called the Peterhead principle, which is I can send a link out, but it's written into all the Revenue's guidance, and I believe they adhere to it. So what they're saying is, okay, you're carrying on a trade. The profit is not the commercial profit. It's ridiculous. It's not the commercial profit because, and whether you could eliminate the profit anyway, because you would say, well, the referees don't get paid, and if we had to pay them, we wouldn't make a profit anyway. So, and that goes more towards the we're not trading argument. But if you're caught, then you can include some of these notional costs. So then you get the profit from trade, you get the interest income, and then generally, unless you're making a payment to charity or something, in which event you can take that charity contribution off. That results in taxable profits, i.e. adding up the profits from each of the sources, and you pay tax at 90% on that. And typically, I mean, I did a lot of this when I was at Deloitte, obviously for different scenarios, but you do a computation just showing how you've calculated all that. And clubs have been doing this a lot, you know, all the time, and where you could put your best foot forward. You know, you don't have to play the revenues game and just put the minimum costs in. You can play the game a bit. And what happens is you file. If you file, you've got to file within a year of the end of the accounting period. And if they don't challenge you within that year, within the year after you filed and you've disclosed everything they could need, then you're home free. They can't challenge it. You have to have effectively hidden something in order for them to challenge it after that. And so one final point, you may be selected for a challenge, you may be selected for an inquiry. It happens very little in sport. In sports clubs, I would envisage it would happen very little with you if you've got a track record with HMRC.
Okay, excellent. We've got a few questions coming in on the chat, but I've got a few more, so I will come back to them in a moment. So next question is, we are a company limited by guarantee. How can we determine that we are not liable for corporation tax?
Yeah, well, as I've explained, you have to look at, I mean, you have to produce accounts, admittedly very short and abridged accounts of Companies House, but you will prepare your own detailed profit and loss account when you're doing your annual accounts for presentation to your members. And so you have to look at them. Basically, there is no exemption for a CLG. You just have to look at your sources of income. So we're back to this old hoary chestnut of, are you carrying on a trade? Do you have any interest income? Principally. I guess I don't think anyone here probably will have any rental income. Some of the rugby clubs have loads of rental income because they use their facilities for all sorts of purposes, but not for referee society, I don't think. So so that's what you have to do. And it's, for people, I mean, for volunteers that are not, I mean, people say, oh, you're an accountant, you can do all this. Well, there are all types of accountants. And they're not many tax accountants, and they're hardly any tax accountants that know about this sort of stuff. And that's not me being big-headed, it's just a fact.
Wonderful, thank you. Next one is an interesting point. It says we need to understand our corporate tax status. What, if anything, are we subject to corporate tax on, and how practically do we need to deal with the filing? I think you've covered some of those points. Is there anything you want to sort of add further on that, Richard?
No, I think you have to go through the process. And practically, how do we need to deal with the fine? That is a good question, which I tried to address. It's all online, so you have to get some software, and the chances are, if you think in that position that there is some tax to pay and you can't become dormant, then in your position, I would go along to your local accountants who will be filing CT returns for a number of businesses, local businesses, and we'll be able to help you with that.
Next question is how to help HMRC understand that the Ref Society is a voluntary non-profit making body, so should be exempt from corporate tax. Again, I think you covered this, but anything further?
Wow, I think there's a broader point here. I mean, throughout my career, I've always believed if there's been an issue for a sector in going along, I mean, we did this with sports clubs and the Community Amateur Sports Club scheme. Go along to the revenue centrally, the policy people, and say what you're doing is actually hindering a very worthwhile recreational sporting purpose. You're not collecting any tax. You know, you've got 40 referee societies that are in this position where they're getting questions from the revenue. Shouldn't we, as a matter of policy, speak to you who are in charge and can actually corporation tax policy people and tell them to get lost, not get lost, but you know, that this is an argument that you know, if there were 30 odd societies wanted to have this argument, huge waste of time. Why, in principle, can you not get some sort of policy direction that they should leave you alone? So I mean, I think that's the macro point. The micro point is, yes, yeah, Corporation Tax Services Department are the people that deal with this. Maybe it's worth an approach to them, but just a bit nervous about that unless we had our ducks in a row. I mean, on an individual basis, that's where you go as a club, as a society, sorry, and as a club actually. But biting that big sort of apple, where you know you all perhaps will have slightly different circumstances, might just bring attention to you, and maybe you don't want to do that. So, but there is a macro point there. I believe there is anyway. Yeah.
Okay. And then the final question from those questions that we had prior to the webinar is, I've had numerous discussions with HMRC, and they have finally ruled we need to file tax returns, which we want to avoid. I think that's a statement of frustration, but
yeah. Well, I mean, in the case that that I dealt with, we had I think we had a couple of letters went into the Revenue. I think they lost one of them because they're very good at doing that, and they just kept battering back. Oh no, you've got surpluses. You're not mutual trading, because that was the argument we put in. Well, it's totally irrelevant. Of course, we weren't mutual trading. We accepted that. So it depends what arguments you put forward. I mean, you know, with permission of the society, we could easily have a sort of a template letter. Maybe that would help. But I mean, I would, if the club concerned has not considered this non-trading argument, which I'm bound to say would be quite a natural argument, really, for anyone advising a society. It would be. Because you have to go back to, you know, thinking cap on, because the natural thought is, well, it must be a trade, you're making surpluses. Oh, well, no, not necessarily. But it's when you delve into the detail and you put that in front of the revenue, I think that they can understand that you aren't trading, you know. But maybe the case that I've explained there is not typical. But if it is, you know, I would go back, I would accept it, you know. And actually, final thought, there is a provision, there's a dispute resolution process where you can go to someone independent in the revenue and say, no, we don't agree with this, will you look at it? But I mean, I know that sounds a bit severe, but you know, try it. If you haven't tried the non-trading argument, it's worth trying.
okay, next question. I'm going to go to the chat, and I see there's quite a few messages on the chat, and I'll catch you.
Good.
You guys are all sort of chatting through. First one is from Neil. He said, is it possible to obtain a copy of the letter or summary that Richard wrote to the HMRC in relation to his recent success? I think, Richard, I think that's something that you and David spoke about.
Yeah, I mean, I'm conscious of client confidentiality. So, I mean, I guess, yeah, and a lot of it was very much client specific, society specific. Well, it was, because I spent quite a long time going through with the treasurer. It was really great. It was very helpful. Got all the information I needed and put it together. Something we can discuss with David. Yeah.
So I think we'll do that. Sorry, go on, Richard.
Yeah, I did actually see something came up on the chat to say that they did get dormancy treatment, and how long did it last? Have you picked that one up?
No, we'll come on to that one. So
okay.
I'll come back. So to Neil, in terms of that, we'll look at what we can do for that. I take your point, and we'll see what we can do, and we'll pick up with Michael and sort of share that. Obviously, we've got all your email addresses. Stuart, your questions coming to me. If you need to chat, Stuart, you're set to me rather than everyone on your chat. But you've said the society does not charge clubs for referees. That's the responsibility of the Yorkshire Federation, which pays all refs' expenses. So therefore, you put Mo trading. I think you're suggesting no trading income. So that's up in it looks like in around the Yorkshire area, Richard.
Yeah. So the society doesn't have any income from clubs.
And Stuart, do you want to come off mute, Stuart, and just answer that directly? It might be easier. Stuart, can you answer that one, Stuart?
No. Is he? Oh no, that's Nick. Sorry.
No, that was Stuart. That was Stuart saying no. Okay, so no trading income there. Does that answer that point? I think it does.
Well, if Stuart wants to follow up with me with an email, I mean, it sounds as if the situation is quite different. But I think, in essence, you look at what the society has in income terms, and I suppose it really doesn't matter whether the income is from the clubs. I need to think about this, or from the federation, who collect it on behalf of the referees, because at the end of the day, the referees' expenses, if the referees' expenses have got to be met, there must be some income to meet them. If the expenses are taken somewhere else, part of the problem, I think, can't be trading. If you've got the only income is from your members.
Okay.
Although you might have some interest income, so bear that in mind, but you might not.
I'm just going through these. So Stephen said, as a company limited by guarantee, in terms of providing services for our members, would we be better protected if clubs in our county were members, e.g. associate members?
Yeah, I mean, generally, when you look at, well, would it be better? Probably no, because one of the things I didn't go into on mutual trading, one of the things that you got to be able to demonstrate is that if you wind up the club, the surplus assets go to the members. And in that scenario, probably not going to be the case, is it? Because I think most club constitutions and articles provide for the winding up surplus to go to some other referee society or some local good cause. So that would immediately stymie you. So I suppose, so it's not mutual trading. So is it trading? Is it trading with your associate members? I don't think so. Based on their guidance, when they say members, it's usually full voting members who are entitled to share in the activities of the referees of the club. That's in relation to clubs. So I wouldn't rush away. And try and reconstruct that, unless I was going to have some sort of conversation with the revenue about it. But you may be better off trying to argue that you're not trading.
Okay. A question from Kurt. They've spoken to 3 HMRC folks and provided 2 written representations. They now still have a letter back from a higher officer. Where does that leave us? Give up and have to submit a tax return?
Well, higher officers are not that high, actually, I don't think. I mean, the normal route where there's a dispute is, you invite them to issue an assessment, you appeal against, and you take it to a tribunal. But the costs of, and that actually can bring into play this alternative dispute resolution service. But I don't know whether you've tried. I mean, for example, in one of the departments I've been dealing with, which is the cask unit, they recently recruited someone who was clearly wet behind the ears and made all sorts of stupid points about why this particular club shouldn't be registered as a cask. And technically, they were just completely wrong. So we put in a very, very robust response, effectively saying, actually, you don't know what the law is. I mean, I'm not suggesting you do it. And we got it through. So the people there are not always very well trained, and this is a very specialist area. I suppose you could ask for it to be reviewed by because there's a technical team in Parliament Street responsible for trades. I've dealt with the guy, so you could elevate it even further. But I don't know whether you've used this non-trading argument, or whether you can use it. But I would certainly have a go at that, because it wouldn't occur to them, that I don't think, that they would use that argument. I mean, if you were trying to argue it's mutual trading, forget it. You're lost. You're sunk with that, and that's what we originally tried. It was no one's fault. That's what they thought the answer was. But when we got down to it, it was, well, we're not commercial. I mean, does any society feel that they run their society as if it were a commercial operation? I can't imagine that you do. Do you?
No.
So I would stick at it. Yeah, I mean, you could actually ask for it to be referred up the line to a technical specialist somewhere. A higher officer is nothing really.
Right,
No.
so you're saying, and sorry, I came off mute. I don't want to make this just about me or our society, but I think many societies are all very similar, right? I mean, you kind of, like you described, you lay out budgets, you try and operate within those and therefore not make a surplus, but you never get it perfectly right. So to be frank, we've made surpluses for the past 2 years, which is probably why they're looking at us. But if we continue to do that, we would have to change our fee structure or do whatever, because we're not trying to make money out of the clubs.
No. And do you and so you fix your fees based on the cost of travel that you anticipate the referees will carry out during the year and what they're going to recharge you, do you?
Exactly. Yeah.
And if I mean, you could really frighten them by writing back and saying, well, don't be ridiculous, because if we had to pay these referees, we would lose huge amounts of money. Because you wouldn't, and the RFU wouldn't allow you or wouldn't want you to increase the fees, double them, triple them, would they? I mean, Michael would probably sit on you like with like a ton of bricks and say, no, you can't do it. So it's frustrating. I know. I mean, maybe I don't know. Maybe Martin, Dave, and Michael will be happy for me just to have a look at the correspondence. I'm happy to do that, but I don't want to poke my nose in this. This was not a work-generating exercise for me.
I'm sure not. I think we just need some tactical approach, as in, we go like I said, I've had numerous involvement with them, and I kind of feel like, well, what else can I say? So we just need a few tactical, say this, and this, and then you're going to be okay. And maybe your letter, if we get a view of that, will kind of give us a few tactical points, right?
Well, I mean, I'm far from me to blow my own trumpet, but it started off, and Dave will tell you, right at the beginning, I've taken professional advice on this, and his advice is da 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 da, and they agreed. Who are you dealing with? Corporation Tax Services?
Yes, that's right.
Yeah. Okay. Well, you'll probably get someone completely different to Corporation Tax Services. I mean, I think the letter we got, it wasn't even signed, which just actually tells you something, doesn't it? But they're not very efficient. I don't think, but they're not very technical either. So worth another go. Was that Kirk?
It was Kirk. Yeah.
Thank you. Okay, I'll stop asking questions, because obviously you've got a list to go through, so I'll let you get
it's a really good one, and I think, Kirk, that sort of touches, you had the hourly rate, would you use for voluntary time? I think that we'll pick up all of these points in the chat. If we don't, we'll try and sort of make sure we've got comprehensive answers to you. And then there's also the opportunity, speak to Michael, drop a note into Michael or Dave or myself. Our details on the website, but certainly, Michael, and we can sort of, if there's anything specific that we've not covered. Just conscious of time. Neil, you really interesting question, this one, Richard. At Staffs, they've been hit with a couple of corporate tax bills. They've been settled. Would they get anything back if they were successful in being dormant? So is anything retrospective?
Well, it's probably an error and mistake claim, isn't it? Sorry, you won't know what that is, but I mean, in the old days, if you made an error in a tax return, you could sort of go back. I mean, I would have thought that if you could demonstrate that in those years when you paid tax, you shouldn't, and that you did, your return, which you must have filed in order to pay tax, was in error because it was a misunderstanding of what is a very, very complicated law, I would have thought they would have repaid it, the tax you paid. And I would have thought they would say, I mean, in the case that we were dealing with, we went back to 2019-20, and the dormancy treatment gone on from them for 5 years. So I don't see, although you're probably out, but yeah, I mean, it would be worth, from a practical level, whatever the law says about going back, it would be worth, if you feel you've got an argument on this non-trading point, to go back and hit them with it, and then if they don't respond, you can sort of say, this is just completely unfair, and you could take it further and complain. I mean, I think that's what we did in our case. I think we complained about the delay. Maybe it's another case I had. We complained about the delay in dealing with it. The fact they lost the letter, I mean, what planet are you on?
Yeah, sorry, Mark, I'm conscious of time and I don't want to butt in, but sorry, it's Neil. Richard, thank you very much for lots of information on this. We actually file ours through an accountant, so I don't profess to be an expert at all at this. And I've had many discussions with our accountants along the lines of how the hell does a society that's a mutual society pay corporation tax? How are we responsible for it? And they always come back to our trading profits, which, similar to what Kirk was saying, you know, the estimated fees for a referee that we charge the clubs over the year and our expenses for those matches, we try and match, but and so unfortunately there are sometimes surpluses, and that's where I think again our accountant probably isn't an expert like yourself, Richard, in this.
Yeah,
so it's been really useful, so I appreciate it.
Well, I mean, the case we picked up, the reason that they sniffed the air and thought, oh, there's something for us here, was because there was a surplus. But it was exactly that situation. And 2 years later, most of the surplus was wiped out because COVID came along, and we didn't feel we could increase. I'm maybe slightly exaggerating. We didn't feel we could increase the fees. I think we increased them from £24 to £25, and we made a loss of a deficit of about 20,000. So. And actually, if they're arguing it's a trade and you make a loss, well, you've got a loss carryback claim. I don't think that's the route to go down, but they can't have the cake and eat it. And I think the right answer is to say get it technically right. And yeah, I mean, probably your accountants just think, well, is it mutual trading? No, it's not mutual trading, so it must be taxable. Well, no, that's not the answer. We've got a tax system here. It lays down certain heads of charged tax, and if you can demonstrate you're not trading, you're not trading. They can't tax it. End of. And that's. I mean, I was delighted with the result, and maybe I thought we might have got a few more questions, but we didn't, and we were all clapping our hands. I'm delighted. Everyone was delighted with it. So, but I'm glad that we fleshed out these situations, because it does demonstrate that that there's a potential real issue here, and there may be many clubs here that have not had this wonderful encounter with HMRC. So, and particularly if you societies, I keep calling it clubs, your societies, and if you incorporate, the chances are the revenue will start to try and get their claws into you. So be warned.
Mm-hmm. Richard, Nick raises an interesting point. You'll have a strong view on this, I'm sure. Since all ref societies are essentially groups of volunteers, only recompensed expenses in non-commercial activity driven by requirements of rugby, is it not possible for the RFU to negotiate a blanket exemption with HMRC for most all refs based on the arguments you've outlined? Basically, can we create a case? Well, how would that land? Is that a route? Is it an option?
Well, I think it is. I mean, again, this sounds very big-headed, but on the CASC and charity status, I sit on a national charity tax forum organised by HMRC, and when the COVID support grants came out, I approached the revenue, and Sport England commissioned me to do some guidance on this, and we got the trade capital allowance specialist in London to look over what I'd done. And so that's the sort of route you go along, and you actually say, this is the situation, you're wasting all of our time, it's costing us all a lot of money. Can you not do can we not have a policy statement which you can look at and say, well, we don't disagree with that, and we can then, any society that gets approached by the CTS or whatever, we can say to them, look, we've already put this through your technical people. They agree this is not a trade. This is not taxable. So, don't, accept and make them dormant. I'm not aware of that happening in any other sector, but there's no harm in trying. I mean, I think it might be nice to get a sense of how many societies this might apply to. But I mean, because I think a few of you are dormant, and actually, if you think about it, it's totally unfair, isn't it? You essentially operate on the same basis, yet you've got one here and one there, and they're taxed completely differently. It's balmy, but that's the tax system for you.
Okay, so one for us to take away and think about how we can support that. I can just jump in. If you can stay on, that's great, Richard. If you're okay to carry on.
I'm okay.
Yeah, a couple more questions. Stuart said they've got bank interest under £100 per annum. Are they dormant? Over the past 8 years, our accumulated loss is £520. Should the society become involved with HMRC?
Well, that's a matter for you. I mean, technically, unless the revenue designate you as dormant, you won't be treated as dormant, and therefore you open to the attentions of the revenue. Just thinking out loud, I mean, there may there was one football club and one rugby club I helped with this that were potentially in a similar situation. They had actually the football club. I was quite surprised. It's worth recounting because they got dormant treatment, but each year they held a fun day and they made a surplus of about 4,000. And they had a football competition for the youngsters that made a surplus of 3,000, and this was likely to continue. And they approached the revenue, argued effectively these were just one-off fundraising events, shouldn't pay tax on it because they were concerned. The surplus of £8,000, they didn't want to pay tax, and they got dormant treatment. So, by analogy, I think it's, for me, it would be better to be safe than sorry, because there may be other things in there which, I mean, in that situation, I think they have good arguments for saying they weren't trading in these fundraising events, but it was fully disclosed. I think that the same is true of interest. But if you said you didn't want to do it, I'd understand. But if the society was a limited company, I would be inclined to do it. If it's constitution, I guess if they approach you, you could then argue. But I don't know. It's a bit of an effort, but it would be relatively straightforward. I mean, in that particular case, presumably they are referees' fees. They're club's fees for the referees. So there's a little bit, given what we've been seeing, the difference between treatment. It would be worth clarifying that so that you don't get a nasty visit from them or a nasty letter from them. Yeah, but I mean, I would understand it if you decided you didn't want to do it, but that would be your choice. If it were me, I would do it. But then I'm perhaps in a slightly different situation.
Kirk raises a point about a number of things that you've made. Is why is the RFU not helping us overall to get this cleared up with HMRC? Richard, I think you can probably explain far better than I. You work across a couple of different sports. You work with the Sport and Recreation Alliance, and you do a lot of work in this. And I think obviously having events like this, we are certainly wanting to try and support and help where we can. And I think certainly I'm speaking now on behalf of the RFU. Securing the services, Richard, is absolutely worth its weight in gold for us and for clubs across a number of areas. Richard, is there anything you want to add into that?
Yeah, I would say don't knock the RFU. Don't knock the RFU. You look at the other sports; they're absolutely hopeless. They don't provide any support to their clubs. I don't know what they do for their referee societies. I would say that this particular issue is a typical issue insofar as volunteers of clubs and societies don't understand their tax obligations. And I would say that through the good offices of Dave and Michael, we came across this situation for this referee society, and we've sorted it. And now we know that it's a situation that pervades across a number of referee societies. I think we've got the opportunity to do something about it. I mean, I think the case that I was involved with, it only reared its ugly head towards the end of last year, the beginning of this year. So we're sort of September now. So we can do our best. I mean, the revenue may just stick two fingers in the air to us and say, "Go away," we don't want to do this. We've got other things on our plate, which they have. But yeah, it's worth. Yeah, but I wouldn't apologise for the RFU. I think the RFU does 10 times more than most of the other sports. Cricket, football, tennis. You're lucky you're in rugby, because you've got myself on direct tax. You've got a VAT specialist in Russell Moore. You've got Erwin Mitchell provides support on the legal side. It's really, really good. Anyway, I perhaps defended you too much, but I don't think I could, Martin.
No, but I thank you, Richard. I think we do take the point. And where we can, we'll always try and look to support and make that support as best as we possibly can. So just moving on, Ian, you said point. When we incorporated in 2012, we obtained a letter from HMRC agreeing to a dormancy. Is there a time limit?
Well, good question. I came across a club it was, I'm not sure, I can't remember whether it was a rugby club or not, who was in a similar position. And it was 10 years ago. And, you know, I think the letter said that we will review it every 5 years. I mean, there's no statutory requirement, you know, that they will review it in 5 years. I think what we did in this other case was they decided that things had changed a little, and what they would do is write a letter referring back to the original dormancy letter and just saying, well, look, the position hasn't changed, or it has changed in this respect. You know, we don't believe we've got any corporation tax liability. You know, here's our notes on why we don't think we are. Can you just confirm that that stays in place? I mean, the good thing is you've got that dormancy letter. That's brilliant.
Can I just come in, Martin, here, and Richard?
Yes, of course.
Yeah, I mean, we had the dormancy letter, and I've still got that on record. Our operating model has changed a little bit since then, in that we do now charge clubs a match fee, which we didn't used to do. So technically speaking, I suppose what you're saying is I should actually highlight this now to the tax people to make sure that they are aware of this, and seek another dormancy certificate if I can get one.
Yeah, and when you write, obviously it will be evident that you're charging the club's fees. You would just put in that comment, and, you know, this is non-commercial activity. We're doing it to comply with the rugby's reunion's requirements. You know, it's not trading income. I don't know whether, if you've got a surplus, you know, that will be
the only other income would be interest, which obviously has not been great over recent years. And what I technically do, for example, last year, I could see we were making a surplus. So for 6 weeks towards the end of the season, I didn't charge clubs anything. So I technically made a loss. So I'm hiding it away a bit, but that's the way I'm doing it, if you see what I mean. So
well, it sounds as if you're in a good position to turn the accounts and just say, you know, we're not trading, you know, we're doing this now.
Yeah.
As you can see, there's a loss. Can you continue with that? Yeah. But I think that would be advisable to, particularly since there's been that change, is just to refresh that dormancy treatment. But well done for getting it in the first place. Well,
thanks for your help. Thanks for your help.
And then the final question from Stephen. Interesting question, this one, Richard. Is income from donations / sponsors trading revenue, and does that change if we put their names on our kit, website, etc.?
Oh dear. Oh dear. Oh dear.
Be the best of the last.
Oh yeah, well, donations, individual donations where there's clearly no business advertising or acknowledgement or whatever, you don't have to worry about. They're donations, they're not part of a commercial trade. Sponsorship, unfortunately, sponsorship is a difficult one, because the revenue in their guidance say, well, but it's in their mutual trading guidance. So, but nevertheless, they extend that to the non-mutual part, if you like, of an activity of an association. They say sponsorship income is taxable as a trade, but I'm not. You know, at the back of my mind, it's also a question of de minimis, isn't it? You know, how much is it? Because if it's tuppence halfpenny, they ain't going to be too interested. And even if it was taxable, you could probably find some costs to offset against it. I mean, for example, on the referee kit, you know, that's useless, no value, unless the referee wears it. Well, there's a cost of him wearing it, because you have to pay him his travel expenses, isn't that? You know, and using that Peterhead principle thing, if you had to pay him for it, there wouldn't be any profit anyway, would there? So I think it does change, and I think if you've got a set of accounts and the revenue saw them with sponsorship in it, they would immediately reach for the trading charge. So I think in that case, if you're treated as a dormant, you'd need to tell them. If you're not treated as anything, I would be inclined to try and get dormant treatment, on the basis that this is all part and parcel of running the rugby operation, which is completely non-trading, and therefore, can you continue with the dormancy, or can you give us dormancy? But I'm a bit nervous about sponsorship, because it is red rag to a bull. And what is sponsorship? Well, if you give nothing in return, sponsorship for direct tax purposes where there's maybe just a limited acknowledgement. But as soon as you get into logos and appearing on shirts, etc., and agreements, presumably there's some sort of agreement, money changes hands. So, I mean, if they just bought the shirt, bought the kit for you, maybe it's slightly easier because you don't reflect it in your accounts. But if it's your kit and then you just put in the logo on it, yeah, I get a bit uncomfortable about that.
Yeah, and if I could just explain, I mean, we use it to fund the kit itself, typically.
Yeah.
So the cost that we would offset would principally be the cost of supplying kit for the referees. But we acknowledge the donations, and we call them donations in the accounts. But that's, you know, semantics. But we do put their names on.
Yeah.
There's no agreement. That's the thing. There's no agreement. We do, you know, acknowledge that they send us money, but there's no agreement in terms of how long that lasts. So,
are you happy to tell me how much it is roughly?
We've got 4 sponsors who pay between £1,000 and £500. So in total, we've got £4,000 of sponsorship.
Yeah. Well, I don't think it changes my position much. And maybe there's but the trouble is with this, the tax rules for partially trading organizations are horrible. They even a golf club even went to the House of Lords with their case as to what should be deductible and what not. But where you've got a dual purpose expense, the rule is you can get relief for it, but not all of it. You have to allocate it between the purposes for which it's been put. So, whilst it might cost, well, I don't know what it goes. If it costs 4,000, then you wouldn't be able to offset 4,000 against the sponsorship. You might be able to offset a couple of thousand, and then you might be able to cover the rest because it's all done by volunteers. And without the volunteers, we wouldn't have any sponsorship. So end of. But so maybe I'm just being a bit unrealistic and going back to what I would advise as a partner in Deloitte. But I mean, have you had any contact with the revenue at all?
Oh, we've recently had contact with the revenue. Not about that. It's just that we incorporated 4 years ago, and they've been sending us penalty notices because we haven't completed a corporation tax return. But the thing that they've been sending us a penalty notice on is we set up the company 4 days before our financial year end.
Yeah.
And we filed returns at Companies House every year on time.
Yeah.
They are saying that we haven't filed for the first 4 days, and they are saying that our accounting period, they want tax returns for the day we incorporated and not coincident with our financial year, which has become news to me. So I've been trying to argue with them that the first few days was immaterial. We weren't doing anything. It was end of the season, but they're still sending us requests now. Partly because, and this is just a long and complicated, I don't have to bore everyone, partly because we filed our Companies House returns, but the link to the tax return didn't go through. So I've set up a government gateway account in order to do that. And of course, that's when they started sending us letters. So,
but have they asked you for corporation tax returns for subsequent years?
I've literally got letters today, which that I think are saying we do want them for subsequent years.
Well,
but for that period, the odd period, not the financial year.
Okay. So, yeah. Well, as you move on, clearly you've got to address, you know, if they're asking for a return, you've got to file one. It's for subsequent years. Just forget about the initial stub period. But so you've got to address this issue, haven't you? And you've got to get them to agree you're dormant if that is the case. So it's an opportunity to deal with this.
Yeah.
I mean, you're not putting your head in the lion's mouth because, you know, the lion is there. You know, it's going to bite your head off anyway. So
yeah, no, it's been really useful to have the background because at least I know how to approach this conversation.
Yeah.
When I go back to them about it.
Yeah, well, good. I'm pleased. I mean, the response has been superb. I mean, I think I was saying to Martin the other night, I did a presentation. It was to another sport, but it was on a legal structure. I didn't get a question, and at the end of it, I thought, oh good God, I put them all to sleep.
I just would echo to be fair though, I would echo the view that Nick's made and the others have, is that many of the societies have incorporated because the RFU wanted us to put in a legal structure, and therefore going as, if you like, a sport to HMRC seems to me to be the most sensible way of standardizing everything. And rather than us all going back individually and fighting different cases, but with the same principle in mind, I would echo that it would be really helpful for us to go as an industry or a sport to them directly.
But perhaps a question for Michael and Martin. I mean, presumably this is going to be the future. There are some unincorporated societies, and they're going to incorporate. So therefore, it's a really good hook to use for an approach for HMRC. You know, we're trying to do the right thing. We're trying to get them to incorporate, but as they do, they're all facing a storm. I was going to swear then, but I won't. But a storm of abuse and letters and requirements from HMRC. Whereas, you know, HMRC are wasting their time. Really, they shouldn't be pursuing this. Don't know. Yeah. Do we know how many are incorporated and how many are not? I mean,
no. We will do. Sorry, Martin. We will do, because we as Stephen was saying, we went through this process relatively recently when referee societies became voting members of the RFU. So we will have that, Richard. I think the interesting thing for me was that we clearly weren't aware of the issues, and some of the information that's coming out this evening on the call is really, really helpful from that point of view. You know, as you say, we engaged you to help the one society who we knew were in trouble, but if there are other issues going on, I'm not saying other societies are in trouble, but from that perspective of being pursued by HMRC, then if we can circumnavigate that and go, let's get rid of this before they start, then I think that's something I'll pick up with Dave when he's back from his leave as well.
Yeah, I wouldn't beat yourself up. I mean, literally yesterday, I was talking to someone involved in another sport, and there were loads of companies. There was CBS's, community benefit societies, and they didn't have a clue about their requirement. They thought because they were a community benefit society, there was some exemption for them. And the guy I was talking to, I mean, he was an accountant, so he knew the school, was a former client, a really nice guy. But his body, his association, the members that he was responsible for, didn't have a clue about this. So you're not alone. It's unfortunately, as I've said for many, many years, successive governments, the Treasury, they don't give us stuff about sport and tax. They really don't. And we've got to stand up for ourselves. And, you know, this would be a way of actually, within the law, I mean, we're not asking for them to change the law because they won't. Within the law, we could get a better deal. We've done it in other areas, so in other subjects.
No, so I'll certainly pick up with Dave Stoveley when he's back, but so we'll pursue that.
He missed a good session, didn't he?
He did, going on holiday.
Yeah.
Brilliant.
Well, Martin, you've got a note of all these questions, haven't you?
Yes. So everything that comes from the chat, it captures it. Obviously, we recorded this, and so we'll share it. So we will absolutely take this away and look at this, and you know, we'll respond to you in an email in terms of sharing the deck and sharing the presentation, so you can look at it again. And then any further follow-ups, we've got all of your information when you registered, which is really helpful for us. But as Michael's alluded to, you know, we can sort of look at this and see how wide this is and so on, and what we can do. But we will do what we can to support, and you know, it's certainly something which has evolved recently, and I think it's for us to sort of see how we can support you and help with that. So if there's anything specific or further from this, then please do drop a note to either Michael or myself, and then we can always pick up. We mentioned Dave Stoveley there. Dave is the National Club Development Manager, and he's on leave, so he's substituted me, and so I apologize that you have me instead of him. But hopefully this has been a helpful and informative session for you. It might not have all of the answers for you, but I think certainly we've tried to do that where we can. So Michael or Richard, I don't think any final comments you have other than that to wish people a good evening. I'll hand over to you two quickly.
No, I'm I'm done. I think we've met our objective. I spoke for about 20-25 minutes, and we've probably spent, you know, approaching an hour on the Q&A. So that's brilliant. Well, certainly a good slug of time, which means thank you all for listening and for your questions. I mean, it really helps our knowledge.
I just echo that. Of just thank you very much for everyone's attendance this evening. I had the privilege of being in the car with Ian Morton for a number of hours the other week, so I got a bit of accountancy training as we went down to Twickenham and back. So, but yeah, really interesting. Not a subject I normally get involved in, but yeah, I can see the challenges that it involves. So thank you for your time, Richard, and thank you for everyone else for coming on this evening.
Yeah. Thanks, everybody. Have a good evening.
Okay. Good night.
Thanks very much. Very helpful.
Yeah.
Cheers,
Bye.
Rob.
Thank you.
Bye.
Thank you.
Bye.
Have you managed to turn off recording, Martin? Have you all sorted it out?
Just
Or-
about
or-
to now.